a great question. I think what I've seen personally that's been very exciting is personal finance. There's a huge interest in personal finance, and I think what I'm very proud of seeing, and it's happening in LATAM, is that they are truly grasping the true intent of open banking, of it not being really just selling products or selling, B2B. They're really realizing the opportunity of reaching out to the customer and providing customer experience. So personal finance has become a real big opportunity. And the most amazing thing is that we look at ourselves, and with very good reason, London being the center of the fintech community in the world, the biggest, strongest fintech community, but yet some of the greatest development of true customer-centric opportunities in open banking have come from regions that we never thought of. I was in Lagos about 2 years ago, and had already seen actually what the WhatsApp announcement was just for Brazil. I had seen a flavor of that already in Nigeria 2 years ago. So there's fantastic development happening on true customer-centric personal finance. Account aggregation is already something that's well spoken of, and I think we're beyond that. But it's really about being able to centralize everything related to personal finance and finding solutions to better customers' lives. Goes back to the initial issue about learning, lessons learned from the UK, right? So we've seen Mexico go probably for the most aggressive of all of the open banking, their open finance, as a matter of fact, the most aggressive of all of them anywhere, globally, it is Mexico. They've gone for a completely regulated, but a 20 subsector fintech law, which is the most aggressive of any country. In the UK, for example, we've only looked at banking and the CMA9 as an initial start. In the UK, in Mexico, excuse me, it's 2,265 entities that will be regulated from the beginning under the Mexican fintech law, completely regulated. Brazil has taken that even a step further, but sidewards, where it may not be as so subsectored, but they've taken a very great stance into how that regulation will come to be. So mainly regulated, but they have also thrown in a flavor of market-driven with a close eye. So I think it's a very smart way. Brazil has done a bit of a mix of a 90-10, 80-20 kind of perspective. Very, very smart. I really like the approach. Chile's looking at a bit of a more potentially more market-driven, and we'll wait to see just how that goes ahead. Whether the Senate will proceed in allowing that to happen, and whether that is true. Colombia, in our experience, and what we're doing there is again more regulated. It's not market-driven. It's completely regulated. Superintendency as pretty much will seem to be pretty much dictating what happens. So I think again, it's about lessons learned. They've looked at Mexico has done a great job of looking at Asia, looking at the UK and every other region, and have just taken a stance based on what they believe are best practices. So again, I still have a bit of a nudge towards being more regulated with a slight percentage of allowing the market to also breathe. We had the honor the Open Vector met with the governor of Seoul, South Korea, 2018, I believe, and we met with him, and he told us that they've been doing what we now call open banking for quite a long time, and he basically told me that they've realized that because they did not have any level of regulation, nothing's happening, in the sense of, yes, there's APIs but it's the banks handling, monopolizing, using it for their own benefit, and not really doing anything that's really customer centric. And again, you're going to hear me say this, and if I'm the counterweight of that, I'm happy to be. I'm very, very much customer centric here, and hearing South Korea say that they feel that they should have regulated from the beginning is really a good example of that. And again, we take Singapore as another example. there's lots of claims of Singapore doing open banking. In my humble opinion, it's more closed banking, because where you're doing open APIs within your own clients, well, that's not open banking. So we're not hearing a lot of products and services coming out of Singapore, because again, it's very much non-regulated and very market-driven. Unfortunately, traditional banking is a very difficult thing to break, and we have to hope that regulation will help to nudge that. And the unfortunate thing, which I've been labeled as to be using scare tactics, but it's not. It's proving to be true. Is big tech. Big techs are forcing the hand, and they are coming out with the products and services with or without the banks. So this is again where I'm hoping that regulation will help to nudge the banks just over the line to allow for this customer centricity. I think we all have a role to expand more. We only talked about corporates, we talked about people that we assume to be banked, but we haven't said anything about what we're going to do about the unbanked. And I think that that's a really important aspect. And if banks are looking, if banks, big techs, fintechs, small tech, small institutions, neobanks, whatever, really want to look at the opportunity is to go after the unbanked. We're talking about millions and millions of people that really need social financial services. So I think that that is where the opportunity really lies. Open Vector, we're aiming is we're trying to create the right structures and pillars around the globe to ensure for open banking, open finance, open data. The true destination here and our passion is anywhere from Canada down to Chile to Nigeria to wherever we are, is to ensure that the right structures are in place so that we look at a ease of cross-border solutions. So someone like Josh and Lanier and all of your fantastic products can come along and just place them across the board, with ease. So what I think is going to happen is again is an open finance move into open data with true international based offerings. No firm can do it on their own. Embrace collaborative innovation.